Hi, this is Mark from Perpetual Wealth TV, and I'm going to talk to you right now about foreign exchange trading. This is a Forex chart here that I have of the Euro USD. I'm sorry, it's the USD Japanese yen, and it is on the weekly, and I have a monthly one here of the Euro USD. So you can see the range between the bottom here and here in its last movement of about 20, almost 3,000 pips. So those are points in percentage of movement over the market. And you can look right here where we had a bear and we had a bear. I'm sorry, we had a bull right here candle, and we had a bear candle right here. So the wick is on the long side here, and it shows a reversal in the market right here. And let's take a look at this here. Here's a shorter wick, a longer wick. Shows us we're having a reversal movement at that moment, so it tends to go the other way. So there's a lot of little tiny secrets about reading candles that you can learn over a period of time. But the major thing you want to look at is where is the market right now. Like, for example, the market's at $1.30, $2.75, and if you see this little tiny black line right across here, it shows you the current spot, and this is where it is on the candle. So it shows us on this candle we had a high of $1.30, $3.36, and we had a low of $1.25, $0.08, and so it looks like we have at least almost 5.5 cents to the rise on this candle. So there could have been some big profits in it for you if you were able to zero in on how to profit in that. But let's just take this one candle right here. This is a month. Let's break it up into 4 weeks. So we're looking at the last 4 candles of this candle, and that's how we read that. So we go ahead and select the week, and we see 1, 2, 3, 4 candles. And so we saw a reversal where we had a V right here. We had a higher low than the candle here, and we had a higher low than this candle here, and we had a higher low on this side of the candle and a higher low on this side of the candle, which means that we probably would have got in on this trade when this trade opened up here. So let's go ahead and insert a line just to kind of show you where that is. So $1.22, 77.6, and right now we're currently at, we'll just go down a little ways from it so we can read it. $1.29.716 is just below where we're at. So if the market comes back a little bit, that might be the range where we could have profited from during this trading. Okay, so we know that this is in an uptrend, and so let's go down and look at the daily chart, and you can see where I drew my lines, and you can see all of the action in between them. So let's go down to the 4-hour chart, because daily is 30 to 31 days, of the month, and 7 days to the week. So 1 week was 1, 2, 3, 4, 5, 6, 7. So we started from here to here, and that's the time zone for 1 week. Now let's look down here at the 4-hour chart. We're going to have to scrunch this up just a little bit to see where our lines are. I'm going to go ahead and close this right here. I'm going to draw this out. Okay, so it's way back here where we started. So you can kind of see the major from here to here. And we can see what the market's doing in between. There are candles that actually show us the change There's also a doji candle right here, and let's see what else can we see here. Here's a long shadow candle. It's casting a long shadow, suggesting that the market is now moving in an upward direction. This one has a shorter wick on this side and a longer shadow on this side. The wick is longer, which means that we're probably going upwards yet. Doesn't really show a reversal candle. At this point we had a reversal candle right here, but the market came back down a little bit lower here and continued to change in a reversal direction. So let's go back here to the hourly. Let's shut it down a little bit shorter here to see how far away we are from our bottom line. And remember, we started here and we finished here approximately 693, so about 700 pips. So let's go ahead and look at the 30-minute chart, and then the 15-minute chart, and the 5-minute chart, and the 1-minute chart. So let's go ahead and make this as large as we can so you can see the current position of the exchange rate is moving up and down here as I speak. And let's go ahead and look at some interesting things. Okay, here we see an upward trend, and then we notice that the market on the same candle comes back down here, which means that there's a very long shadow casting a shadow in the market, suggesting that if we drew a line right here, that we were going to be in a direction heading downward. Well, the next lower spot was here where the market changes direction. So if we look at the difference from opening candle here and the opening candle here, we would have had about 2 pips in the market. So that would have been a scalping trade on that time interval. Let's look at it on the 5-minute chart. So we see a trend here developing, and we can draw some useful lines on the chart to see if we're going to go under that spot. So when we see this happening and we're bouncing off of here and here, and we're expecting probably to bounce off here again and keep going upward, but if it doesn't and it crosses down here and keeps going in this direction, then we know we've broken our line here. So that probably gives us a good indication that we're actually in a trend rating in this direction, in a downward direction. So we will be looking to place short trades. So these are all just general comments that I'm making just to give you an idea how easy it is to look at the currency market and make decisions based on what it is that you want to achieve, and that is to make a lot more pips than you lose. So that's the strategy. If you can keep that in that position, then we can look at tendencies in the market and use these tools to see where we're at. Like, for example, here's a last high and the second to last high. Here's the last high and here's the second last high when we were here. So we were looking to break that line right here. We would be looking at the most pips in the market was 13 at that point. And this is the 30-minute time zone. So let's look at the hourly and the 4-hourly. Now we can kind of see where we're at here. And we could have gotten into a trade here because we saw potential. We would have been about right here at this time. This is about a 36 pip move, and let's see. Let's put a custom indicator in there. Let's put an ATR, average true range. I just want to take a look at it for a minute. Okay, so on the average true range, it's telling us we're looking at a 41 pip movement. So we could either go up or down 41 pips. So what I'm going to do is make a suggestion that when I was right here, so let's just go ahead and remove all these lines, and let's just take a quick look at being in this position. Okay, we were at $1.2988.7. If you take away 14 pips from the 88, then you have 74. So we would have a exit strategy somewhere around 74. It's close enough. And as you see, when we got into this, it went up and it went down, but it never took us out below the 41. I think it was 41. Yeah, it's 41. I messed up on this, and it's easy to show you how when you're doing a video you can actually make a mistake. So let's go back here and take 41 pips away from the 88, and that would be right about there. Okay, and then we want to put in where we would take our profit, which would be approximately there, which you see we did touch it right here, so we probably would have taken ourselves out of at least half the trade and moved our stop loss from here to here. So we would have had a trade that was now half the profit of the movement, and we're going to try to profit again on the movement a little bit higher this time. And we can either close the whole trade out approximately there. So now if this market moves up to here, then we'll take our profit out of the market right there. So 41 pips of profit on half of the trade and approximately 82 pips profit on the other half of the trade. And that's a quick lesson on Forex, and I thank you for watching. This is Perpetual Wealth TV, and my name is Mark Whitaker. Thank you for watching.